Thank you, Steve. A very dicey day on the stock market. Dips in the market in the triple and quadruple digits, causing some consternation. U.S. markets taking a dive early following another drop in the Chinese markets, and now the market is closed almost 600 points down. Here with more on the massive sell-off this morning, the ups and downs throughout the day, is Dennis Fagan with Fagan Associates. Thank you for joining us. We saw you earlier today as well. You've been following all of this very closely. What do you make of what happened early this morning with the Dow falling more than 1,000 points?
Yeah, in about 3 or 4 minutes. It wasn't a flash crash like we saw about 5 years ago, but it was disorderly. It was somewhat computer driven. And I think it was built up angst or anxiety over the weekend from retail investors and perhaps people like myself who came into this today and said, I'm going to sell no matter what the price. So that's what I make of it.
And what happened in the office today after this happened? Was the phone ringing off the hook?
You know, it wasn't. I think what happens is you have the same people that call every time the market goes down. And that's why the average retail investor underperforms by 3 or 4% a year. So it was busy in as much that our day starts early on a day like today, around 6 o'clock. So by 9:30, if you're likening it to a sporting event, which is not probably a good analogy, you better be ready to play. You better be ready to know what you're going to do in that event. So have a plan and execute that plan when the market moves one way or another. So we did that. We met with a few clients, talked to a lot of clients, kind of gave them some historical perspective, and then moved on.
What is the historical perspective? 10%
corrections happen once every year on the average over the past 115 years. This is an external event, China. It's not like '08. In '08 we had a crumbling housing market, a crumbling labor market. We had higher interest rates, foreign and domestic. So it's very different than '08. And yet the ghosts of '08 or the monsters of '08 are coming out of the closet, and people have to kind of refrain from buying into it.
So do you think that we will rebound from this more quickly than in 2008, or is it hard to say?
I think we're not going to go down as far. I think it's going to be a process rather than an event to rebound. But I think we're going to be higher, 5 or 10% by the end of the year than where we are now once things settle down.
Dennis, thank you so much for being here with us this
Thanks,
afternoon.
Ann.
We appreciate it very much. Turnover at the top of the New York State Gaming Commission, something we're following this afternoon. A resignation today by Mark Gearan at a